Hi and welcome to another edition of TraderCast's daily market report. I'll just move this to one side for now. ECB launched QE and the US released upbeat non-farm payrolls showing addition of 295,000 jobs on Friday. US dollar soared across the board. Obviously euro and sterling capitulated and tanked on Friday as well. Indices initially rallied very small rally on that news, but then pulled back heavily because that indicated that market participants did not particularly like the likelihood of US interest rate increases, and those increases are quite likely now in June or September because of the strong unemployment numbers. So let me just move this for now, and instead of going into the charts, let me just go into community straight away. This is where I've posted our analysis for the weekend, and let's start with S&P first. Obviously, some traders saw this as a potentially topping head and shoulder pattern with a neckline, a small bounce back from underneath to retest that previous neckline, and obviously rejection at that 2105 level was a trigger. The more disciplined traders were waiting for a loss of 2,100, and then this big selling kind of occurred. So where to go from now? Obviously, important support is down here at 2068, 2060. That's based purely on these two previous highs, height of the wick and the close, but also the fib retracement from this swing low to swing high as well. A loss of this level would probably be quite concerning, and then we could target further downside support towards 2054, which is a 50% fib, followed by 2039, 2040, which is 61.8 fib. Any oversold bounce backs will find some resistance here at this point of control zone at 2078. Only a confirmed candle closing in an hourly or 4-hourly time frame above that 2078 could potentially target further upside resistance around 2086, followed by 2096 area as well. So let me see if I can move this in the right direction. Excellent. Now, DAX. Obviously, DAX was much stronger than kind of S&P or US indices in particular, but it after reaching this 11,600 high, which is what was forecasted by most of the analysts as a potentially fairly significant extension and resistance level, DAX pulled back as well, but in much kind of a more controlled way than S&P for now. Okay, so the important point of control support level is at 11,496, 11,500. A loss of that area could potentially open up the way for the retest of this downside support towards 11,455, 11,447, which is a 200 period moving average in 30 minutes, or sorry, in 15 minutes. This is for intraday trading rather than what we saw for the daily time frame trading on S&P. Loss of these two levels would open up the way for the retest of 11,407, 11,367. Alternatively, a rally into 11,527 resistance and confirmed breakout could potentially open up the way for the retest of further upside resistance towards 11,546, followed by 11,577. Let's talk about gold, guys. Gold was punished. US dollar went higher. Dollar index rallied, and obviously gold lost a fairly significant support at this 1192 zone, which is now newly found resistance. We have a cluster of this higher lows and also this rising support trend line that's lost now. So if the price goes up here and tests it from underneath, it will be only confirming it as a newly found resistance. Only a confirmed breakout and a closed higher above 1192 could potentially target further upside resistance towards 1199, 1209, followed by 1215 levels. The other alternative is either a loss of the current lows or maybe a rally into this resistance zone and then move lower, could potentially target 1154, 1142 and 1132 as a logical downside support area, and also profit taking zones for anybody who's sitting in a bearish camp. Euro dollar fairly similar move, a massive sell-off on Friday as well. The current point of control zone is at 0880, so 0880. A rally into that zone would potentially indicate a resistance purely because it's a moving average. Oh, yet again, this is a 30-minute time frame in hourly time frame, so they're intraday time frames. Only a breakout above that zone and a candle closing above that level in an hourly time frame could potentially open up the way for the retest of further upside resistance towards 109.40, followed by 109.87, 110. And most of these areas would probably be seen as a selling opportunities for most of the bearish traders. Alternatively, either a rally into one of these zones and a pullback, or a loss of the current lows would potentially target a further downside support zone towards 108.15, followed by 107.50, followed by 107.05. And these levels would probably be seen as a logical take profit areas on the downside. Last thing that I want to talk about to you today is cable. Obviously, point of control is at 150.67. A rally into that zone would probably offer some resistance. Only a confirmed breakout above that level could potentially target further upside resistance towards 150.160, 150.172. Loss of the current lows could potentially open up the way for the retest of further downside support towards 150, followed by 149.85 and 149.15. Hopefully you've enjoyed this, and stay safe and happy trading for the next week, and I'll talk to you soon.